Are we good? Hopefully everyone should be able to hear me loud and clear. All right, let's see here. Trying to get everything going there. All right, looks like we are definitely live now, so give me just a second. I'm gonna get used to this after a while. It's just new. All right, so basically we have the trading room thing going, and then we have the YouTube thing going simultaneously. So this should be all Gucci now. All right, so you said my voice is coming through loud and clear. All right, let me just. All right. Hopefully everyone's doing good. We have a few things to discuss with a few upgrades being made. So without further ado, let's just jump into the good stuff first, and then we'll keep it moving. All right, looking at the overnight markets, we're going to start off with the bond futures right now. They're trading at 151.05, flirting with that 150 level. It did hit 150.29 in the overnight, so they are getting weaker, just as anticipated in last night's video. Looking over to right beneath that on the left side of the screen, you have the Dow futures up 27 points at 20,968, having a real tough time with that 21,000 level as far as on a closing basis, having a really difficult time with that. The NASDAQ 100 is at 56.59 1/4, up 3 3/4 points. Looking at the emini S&P 500, it's up $1 3/4 at 23.96 3/4. The crude oil is at 46.27.5. It's down about 15 cents. And the dollar index at 99.47. And as you know, it's having a difficult time getting back above par. Looking at the euro down 47 pips at 109.07. The pound down 23 pips at 129.35. And the Aussie is down 33 pips at 73.49. All right, looking at gold, that's the big story. We're at $1223.80, down $3.30. So we're trading right near the lows of the session. Looking at silver, silver's off 6 cents at $16.19.5. And we did get as low as $16.14.5. And I did caution everyone that you were going to see the lower end of that $16 handle, and that we were in jeopardy of getting near the $15.85 handle in silver. Natural gas is maintaining that average $3.20 price, trying to build support around the 320 level so we can get up to that 350. All right, and excuse me. The thing to be of note is the warning that I gave out too in the metals, that it doesn't seem that the selling is quite over yet, and the market is in jeopardy of trading near that the old 1209 support. So that is in jeopardy right now. It's going to take the miners with it, unfortunately. So we have not seen, I don't think, the lows in the miners either. So that's something that we're going to have to contend with moving forward. All right, let's talk shop real quick here. We do have a few things of note to deal with, so let's talk about that. I had to excuse me, add a few things in the code. I had to be able to send out some more little itty bitsy spiders to seek out a few things in the bot checks. For those of you that are new, bot checks is an old school algorithm that I had that would go out and do a little bit of work for me. What it would do is it would seek out abnormalities within the price action. and that is the birthplace of our rally and crash alerts that we get. So with that being said, the next step was to be able to categorize each event as it was happening. Now, the way that I have everything structured gave me limited spacing to work with. So in a nutshell, I had to come up with a way to use what I had, and then I had to work around said indicators. So that's what I did. So there were two that were added last night, and both of these are going to occur under the momentum column. So you still have your positive and negative momentum column. So under that, you have two more readings that is going to give out, and these are of extreme importance. As you know, the 3 reading lets you know about the momentum in the market, whether the bulls are in control or the bears are in control, or if there's any kind of beginning of a retracement perhaps, or the beginning stages of a new trend. Well, we've added to that because I've noticed that there's been a pickup in, how can I say this delicately, in manipulation on an intraday basis. You won't see it manifested on a day chart or on a weekly chart, but you will see it on the lower charts, like the 1-minute charts, the tick charts, 5-minute charts. You'll see these price swings that they come in little blips, if you will. You'll be like, hey, why did that move like that? And you'll see it. You used to see it a lot in thinly traded markets, but now you're starting to see it in highly liquid markets that don't make any sense. So what I did was I added to the original bot checks dating way back into the 2009, 2010. I went back and I looked at some of those and I restructured them, and I was able to add to what we already had. So you got 2 new readings now. All right, these are in the category of the reading of number 3. When you look at the 3 reading, you've added to that. You have a 39 and you have a 9. 39 is quiet accumulation by dark pools, buy-side institutions. That's where large money is trying to be masked and trickled into the market on a sly. And the algorithms will pick those up. The spiders will pick them up. The next one is a reading of 9, and that's potential high-frequency trader triggers. So what happens is at certain price points, the high-frequency bots will kick in, and it's very difficult for them to mask their approach because they trade enormous size, but they're doing it on a microsecond time frame. So it can be difficult to measure and pick those up. Well, they can't fool me. I've measured and picked them up. So you're going to see the quiet accumulation of the dark pool buy-side institutional money come into the market, and you'll be able to see the potential high-frequency trade price triggers going off too. So that's what the readings are going to show you. If there was any sort of that activity in any security, you're going to see that. And of course, the reading of 3 is still the professional trader footprints, if you will. And that's showing you where the momentum is. And that's the professional money once again. So all of these factors are being baked into the cake, and you're going to be able to see all of that activity now. And it gives you a better reading too, because now you'll be able to see, have more of a measured move. In other words, if you see momentum, okay, that's good. If it's positive or negative, that's good to know. But then you're going to want to know more. I always want to know more. I like to know what type of a play is this? Is this someone pretending to get short while all along they're really trying to get long, or is this someone who's long trying to get short? I mean, there are other factors that come into play other than just the raw price data. So we shake the tree a little bit more and come up with just a little bit more descriptive indicators on that. So that's what you're going to see. Price triggers themselves have not changed. That's where different price points things are happening. So you're gonna still have that, but I wanted to be able to get a better readout as to what may be happening when it's happening. So let's look at a quick example. I'm just gonna cherry pick something from the sheet. We'll go with the dollar index. Okay, looking at the dollar index on the sheet, I'm looking at the DXY. That's the D underscore dot DXY. If you look at that, you'll see something very peculiar. Okay. First thing you see here is the ranking of this security. It has a 50 in the uptrend and an 18 in the downtrend. So you already know right off the bat that this is a longer term bullish complexion, but it's a weak one. All right. And you know that because in the downtrend column, you have an 18. So this market has been trending in a downtrend channel. That's what it's showing you. Now, here's the interesting part now. All right. Now you know where the trend is and what's been happening inside the trend. All right. You know, the longer term trend is bullish. The shorter term trend is bearish, but you want to know more. Now you want to know, okay, within that, what's happening? Well, today we have a rally alert that's letting you know that abnormalities in this market is favoring a potential breakout, a big one. However, under your negative momentum column, you have a reading of 9, which is extremely significant because now you're able to see what is going on behind the scenes. So a reading, excuse me, a reading of 9, as we talked about, is letting you know that there has been some type of high frequency trading activity in this security. You will not see this if you were just to look at a chart. Sometimes you can catch the blips, other times you can't. What happens is sometimes the circuits will get overwhelmed and then we'll see what looks like a bad tick or a little spike up or down on the 1-minute charts and tick charts and things like that. And sometimes you can see it on the 5-minute chart, but then other times you won't. And you only see those when the circuits get overwhelmed. That's when those things will manifest themselves. But then there are times that it's going off more times than not, and there is no abnormalities. There is no enormous spike in the price. And you're like, what in the heck? So a reading of 9 is letting you know that there was some high frequency activity going on here. And it was on the short side, all right, the negative side of the market. So be that as it may, what you take from this with the rally alert, because you know you have a 911, that's a powerful signal, is letting you know that any selling activity that was picked up in this market was to set up for this potential rally. That's what it's showing you. All right. So someone just noted the trading rooms. We'll be seeing many 9s. Yeah, right. Hey, it is what it is, right? So now here's another one. Peep this. Okay. Let's look at the natural gas. All right. Look at the natural gas futures one. All right. Starting with the trend. We know that the longer term trend was, it was in a bear trend for like 3-4 years, it seemed like. All right. But that trend obviously has been weakening. And we're been in a corrective mode, a retracement off those bear market lows, right? You got an 18 in the uptrend column, 50 in the downtrend. But now here's where it gets really, really interesting. All right, take notes on this. Okay, you have a 9 under the positive momentum column and a 39 under the negative momentum column. Now, remember what I said what these readings mean, so take it to heart. All right. A 39 is a more powerful reading than a 9. I'll repeat that again. A 39 is a more powerful reading than a 9. Let's explain. We said 39 was a quiet accumulation by dark pool buy-side institutions. A 9 is potential high-frequency trade triggers going off, right? Now, we know that for high-frequency trading, it does require an enormous amount of capital, okay? However, the institution side is always, I repeat, always more capital being put to work than the high-frequency trading. Don't ever forget that. Institution can be a bank, it could be a large pension fund, it can be an elitist like George Soros, it can be a country, it could be Saudi Arabia, some other big country, you know, sovereign wealth funds or something like that. That's large money. The reason why the 39 is more powerful, this part is going to get you. Because 39 has attributes of 9 inside of it as well. Some of these large institutions are employing a certain amount of capital toward the high frequency side of the market. You heard it here first. You're not going to hear this on CNBC or Bloomberg. I'm the one that's telling you right now. Institutions are now putting aside small portions of their portfolio toward more robotic synthesis. And there is a reason for that. Well, we're not going to go into all of that now. I'll probably do a video series on that. But there's a reason for that. At the end of the day, institutional money is always the most conservative dude in the room. But because of greed and because of the things that are going on, because they're usually more in the know than the average retail person, at the end of the day, they want to make money. So they're setting aside a small amount because right now they're beta testing full automation, allowing full automation of their funding. All right? Because remember what I've revealed to you guys recently, that we're moving toward an AI world where everything's going to be done automated, all automation done by computers, because the belief is that a computer is smarter than a human being. All right. Now, traditionally, large institutions, they can't do anything without taking a meeting. They're the elephant. They're the blue whale, because it takes them forever to make a decision, to put a trade on it, put a trade off. But that is slowly becoming no longer the case. They want to be able to make decisions within a microsecond as well. They want to be first. All right. Now, they still operate like the old school institution that they are, but they're slowly becoming more automated. And when their positions enter the market, because they have to take a more long-term approach still, because they are pension funds, they are large mutual funds, sovereign wealth funds, whatever, they still have to maintain longer holding periods. They can invest in whatever they want to invest in, real estate, you name it. But more money is being put toward this whole AI thing. I'm telling you right now, you've heard it here first before you hear it on Bloomberg or CNBC or any other business channel. You heard it here with the algo capitalist. You heard it here with me first. I'm revealing it on this day, May the 9th, 2017. All right. Now, I know after this video, you guys are going to start finding articles and seeing things trickle out, but you heard it here first. All right. So you know where the original source was. I revealed this first. 39 is institutional side money, along with a few of the high frequency triggers going off as well. So 39 is a more powerful signal than 9. So getting back to the sheet, on this example of natural gas, you have a 39 in the negative momentum column, and you have a 9 in the positive momentum column. What this means is there was some abnormal selling going off in the natural gas. Yes, there was some selling going on. Now, the reason why the sell side is so powerful is because it's letting you know that big money is behind whatever movements you're seeing, even if it's a small movement. Large money can have small movements in markets too. It's not always a big move because some large money came in. The larger the market, the more absorption you have. Also, with new technology, it's making it possible for big money to enter into a market in such a way that it doesn't move the market, even if it comes in all at once. Technology is a changing, and that's what I'm here to let you guys know. And guess what? We changing with it. Cutting edge. If you're not understanding and able to move and shake with the algorithms that the market is using, you cannot win long term in this game anymore. That's why a lot of hedge funds packed up shop and left, because they could no longer manipulate and make money with said manipulations, because those open doors or backdoor situations got closed. Those loopholes got closed. And we don't trade loopholes, we trade markets. Now, markets have not changed, but the approach to the markets are always changing, the way people approach them. But the markets themselves does not change, because at the end of the day, it's still price action. And that's what we dominate. We dominate price action. So in this situation, you're saying that more weight is being given to that selling than on the buy side. So what that tells me is there were some short-term shorts in here, and those stops went off. And also that for whatever reason, someone needed to sell a lot. And that's why we've been seeing the pullback over the last couple of days in the natural gas. Voila. Any questions on that? And have we not been seeing the pullback in the natural gas? Yes, we have. All right. So now you have a rhyme for that reason. You know what's going on. Now, in all fairness, we did have a crash alert back on May the 1st. All right. And that has played itself out gradually. Notice how the system leads the market 3 to 5 bars out. In this case, that was, let's see here, 1, 2, 3, 4, 5 bars back. Isn't that interesting? The low point was hit yesterday in the natural gas. I repeat, the low within the last 5 trading sessions was hit yesterday in the natural gas. 5 days prior, you got the crash alert in the natural gas. All right, alerting you that a pullback was coming. And yes, that pullback was what you can call a short-term algo shift, where the market drifted back a little bit, but not enough to cause alarm. We stayed above the $3 threshold I explained to you about going on the last couple of weeks. And then we managed to stay in the 320s, where we are now at the 321, almost 322. All right. So far, the overnight support of 317 is holding. All right. So the support base is being built. And if I were to average it out, I would say the average base price, just as I also anticipated and told you about a few weeks ago, is around 315-ish. Between 315 and 320 is going to be the new base, because it's going to be needed to boost this market to the 350 target. All right. So there it is. Now, even though the 39 was the most dominant signal, and it happened under the sell side, I believe because you got a manifestation of a 9 under the positive momentum, that it's showing you that large money took yesterday's low point as an opportunity to get long the natural gas. They bought on the pullback. That's what they did. They bought on the pullback. You got heavy on the short side, which equaled a manifestation of price triggers on the long side from the high frequency trading bots. They saw that low, they ran those stops down, boom, that's what that was. So these signature markers are starting to prop up, which gives us better understanding of what's happening behind the scenes in various markets that we trade. All right, so let's look now at another example. Let's look at gold. Today, we see gold has a rally alert on it. All right, that's number one. Number two is that we have some locked in a negative momentum. All right, we have a 3 in a negative momentum column, so we know that professional money is at work. There is a trend, a short-term trend to the downside, and we have a 52 in your uptrend column, which means that the market is in a bullish correction now. All right, it's been correcting itself, but we're getting rally alerts, and what did we learn? Our alerts can lead the market 3 to 5 days out. Rally and crash alerts tend to lead the market 3 to 5 days out. So even if we don't see a rally today in the gold, we have to prepare that over the next 3 to 5 trading sessions, we're going to see it. All right, at some point. In the meantime, we trade what we see. And right now, the supports have been violated in the gold, and it's now heading down. So we need to watch that. Also, you see that the stop runner is telling you that stops are going to be ran today, and look for those supports to be broken. And so far, it is manifesting exactly as it warned you that this was going to happen. Looking at silver, silver is a little bit more interesting. Silver, if you look, we have no reading in the uptrend column, but we got a 50 in the downtrend column. So the market has been in a weak bear market longer term. However, we got that institutional situation going on in the silver. I believe this is showing you that JP Morgan / Goldman Sachs, Deutsche Bank, one of these big players has been shorting the silver. Now we also have a rally alert. All right. Now this rally alert is showing you that at some point within the next 3 to 5 days, this market should move higher. A lot of these institutional readings that come up, sometimes, like I've been showing you, are very short-lived. All right, it's just letting you know that either something is happening or something is about to happen. Just like in the previous example, we talked about natural gas. It showed you that institutional side activity yesterday. But remember what I always taught you too. You don't know why someone is long or short. Someone could be short, meaning meaning that they've been stopped out of a bullish position. Doesn't mean they necessarily got short. It means they have to sell to get out of a bullish position. All right. And then what do? They reverse, and sometimes they get back long again. Or it's showing you that they took an actual short position. You don't know this until the price action confirms that reading. And in the natural gas, we see what? The market is up today versus being down and hitting a new low yesterday. So what happened was the institutional money was operating on that short side, and it's looking like they liquidated yesterday from the shorts and got long. In the case of the silver right now, we're saying that they have been operating on the short side of this market, but it doesn't seem that they let go. There's no sign that they have let go. That's why we have that rally alert. The rally alert is showing that based on the irregularities in the price action, we could get a bounce within the next 3 to 5 days. However, right now, everything does seem to be locked in on the short side of this market. All right, so keep your eyes and ears open on the silver. Silver is weaker than gold right now. So once they both turn and start running up, expect silver to move higher and more based on the percentage, because it has more to make up than the gold, because it's been attacked heavier than the gold. All right. Okay, let's move on to a few more case studies here. Let's look at some more crash alerts. All right. Bitcoin has a crash alert on it. You have nothing under the downtrend column, but your uptrend is locked in. Your uptrend column is locked in. Okay. You're trading with good momentum. Oh, that's beautiful. But you have a crash alert, which means that money could be taken off of the table here rather quickly. So you're going to want to guard any profits that you have in this Bitcoin market with tight stops. All right, it's not wrong to take profits along the way. Okay, it's not wrong to take profits along the way, but just use your stops. Use the recommended stops on the with the pulse wave price triggers, and you will do very well. Even as we speak right now, the Bitcoin is up 79 bucks. All right, so it's just on a tear right now. But you need to use those stops, tighten those stops. And then that way, when this thing turns on a dime, you won't be looking stupid. Like, oh my goodness, I could have got out at 17, 18, 20, where it is now. Instead, it dropped 500 bucks. You know what I'm saying? You don't ever want to have that conversation. So right now, the Bitcoin is strong at 17, 18, 20. All right. So far, it is $200 more than where I told you it would be. I told you it would be at 1,500 this year before the year was out. So far, it's bested that by 200 bucks, which is great. All right. For those of you that want to use a conservative stop, I will use my conservative stop at 1,500. For those of you that are following the pulse waves, then you would do well to follow the pulse waves and use the stops recommended therein. Okay, let's move along here. All right, so where were we here? All right, other things of note. Dry ships. Dry ships has a crash alert. Like, no kidding, right? Still locked in on the downside. We do not have an entry price on this one. The system is still locked in on the bear side of things. Nothing has changed. emini S&P 500 of note has a crash alert today. Please watch those supports. I don't think we're going to be anywhere near that, excuse me, for this market to trigger a pulse wave price trigger. It would be a significant sell-off. It would be terrible momentum to the downside. So within the next 3 to 5 days, we probably will see some type of a correction, as it has a problem, or has been having a problem with 2,400. Just like the Dow has been having a problem with 2,100. So we'll watch that and see what happens over the next 3 to 5 days. All right, someone in the room just said that dry ships reverses again Thursday, 1 for 7. My goodness. What else is new with the dry ships? Hilarious, man. Hey, we're married. What can I say? We're married to the dry ships. It's one of those fun ones, you know. What can you say? Fannie Mae has a crash alert. Dun, 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 dun. Where have we heard that before? That sounds like deja vu, right? Fannie Mae. Well, yeah. It's a $2 stock now, and it's in jeopardy of pulling back. But we do have some hard body institutional money going there. Who in the world would put money there? What institution is doing this? They're fired. If they had my money, they're fired, man. I can't see you put money there. That's a dead game since 2008. What's going on? Actually, 2007, I should say. All right, let's see what else we got. JNUG. JNUG has a crash alert. I'm so sorry. I'm so sorry for your loss. It's terrible. All right, let's see. Someone else just said that 100 shares of dry ships are now 25 shares and will be 3 shares on Friday. Man, that is terrible. That is absolutely horrible. All right, back to JNUG. So JNUG right here has a crash alert. It's just falling apart. I think it's going to crash below 12 bucks. There's a strong possibility that that is going to happen. Netflix has a crash alert. OIH, so it looks like the crude oil will probably pull back here some more. So definitely watch that one. That is in play to the downside. What other else things we got here? Quite a few things. Let's see. Silver miners, SIL and SILJ have crash alerts. FAS and Lockheed Martin have crash alerts. This is interesting. FAS is showing overbought, just like Lockheed Martin is. And Myriad Genetics is showing the same thing. And what is this? Qigen, ticker QGEN. All right, all of these are showing signs of pullback on these or overboughtness. SAIC also. And the UNG is showing it. So this is interesting. UNG has not been moving right. It has not been doing a good job of tracking the natural gas. It really hasn't. It's been doing a bad job. They need to rethink that particular ticker. I don't know who's managing that fund, and really I don't care, but they're doing a terrible job. They're not tracking the market correctly. They just not. All right. You guys has a crash alert as well. I think what they're doing is they're picking up on the institution side of the 39 that we got in the natural gas. I think that's what these are picking up. That's what they're picking up. All right. So overboughtness. They think that the market's getting tired and it's going to pull back. I cannot ignore the indicators. I have to check it out. I have to peep it. So that's what I'll do. Looking at where we are, let's see, what did we close yesterday? We closed at 1872 yesterday, and looks like they're going to try to run the stops on the UGAS. UGAS is famous for stop runs too, by the way, so be on alert for a stop run there. But now let's see if this translates to the DGAS. Let's see. Yeah, it does, because we have a rally alert in the DGAS, but we got a negative bot check under the negative momentum column. We got a 9, so high frequency trading activity on the sell side. So interesting. This is the natural gas is going to be really interesting to see how that moves. Also, crude oil, I believe, is probably trying to find its bottom, because we're about to get kicked off into the driving season, and I can't see crude oil being in a bear market, all summer long. I just don't see that happening. But anything is possible. So all I can say is we'll trade what we see, and we won't be married to anything. So that being said, ERX and ERY are both going to be in play. We're going to have to really watch them. I think that the ERX is probably going to kick off more so than the ERY. And that's because I think the ERX is closer to market than the ERY. So again, that's something to take a look at. And I think I might look to operate in one of those myself. Let me make a quick note. Let me pause, make a note. ERX and ERY. X and ERY. Yep, I think methinks that's what I'm going to do. Let's see here. So we got, give me a second. If I don't make notes, then I forget. Let's see. So, all right, and let's see, the ERY is, okay. Yeah, this is going to be interesting today. Yeah, I think now I'm looking at it again. Yeah, I still think the ERX is gonna probably kick off more so than the ERY. Just wanted to double check that too while I was looking at it. All right, so someone asked about Knack and Macy's. Let's see. What is the ticker for Macy's? I don't know it offhand. Let's see. I don't know that one. Let me try again. M. Okay, here it is. Macy's. M. Okay. Let me see if I had that one in the database or not. I may or may not. Yeah, only the ones that we track and follow currently, but if it's something that I can add, I'll add it if someone wants me to add it. Yeah, Macy's is not in the database on the system end, but I'll just look at it and tell you what I think. Oh yeah, this thing has been short for a while. Macy's was a short a long time ago. Macy's has been falling off a cliff since $73.61, all the way down to $27.72, and it's bounced from those lows. Yeah, this is a short. Macy's is an absolute short. I see shorts hanging on to this thing. They're not letting this go. This thing ain't doing nothing yet. It's going to need to close about $29.24 this week just to lock in positive momentum and put it into the downtrend, and that's on Macy's, ticker symbol M as in Mary. Okay, now Knack, knick-knack, paddywhack. Let's take a look at knick-knack, paddywhack here. I'll pull up a chart and read from the system. All right. Yeah, and that looks good. The initial target is $2.08. That's the initial target on the Knack. Has good momentum now. As long as it can stay above 161 this week on a close, then it has a lot of momentum to carry over into next week, and we could get to even as high as $2.50. But right now, 208 is the initial target on Knack. Now let's look and see if there's anything being picked up as far as the system is concerned with Knack. Let's see, Knack. All right. With Knack, we got, all right, we're in the cumulative cloud of death, but we're on the bullish side of the cumulative cloud of death, and we do have positive momentum locked in. So yeah, this is a good one. This is a hold if you're long on that. But I also would not ignore the stops on this one either. All right. Let's see what else we got. All right, someone says, can you take a look at JDST versus Dust? JDST is with green momentum, matching entry price, and with 9 in negative momentum. Dust momentum is red and way below the price trigger with a 39 and the negative momentum column. Okay, let's compare and contrast Dust and JDST. Why don't we? All right. So first things first, let's take a look at the Dust. Let's pull this up. All right, on Dust. Okay, Dust does have a rally alert on it. And I do see that 39 in the negative momentum column. It's in a overall bear market, but it's in a retracement of a bear market. We have a 5 in the uptrend, which means that things are somewhat trying to change on the daily chart to a more of a trying to form a weekly uptrend. Okay, that's what this is showing us, trying to form a weekly uptrend. You are definitely buying the pullback here on the Dust, but it's also showing some more possible institutional money coming in. Let's see. I want to say that it's looking like over the next 3 to 5 days, this one could go the opposite way on the dust. And the reason why I say this is because if gold does rally within the next 3 to 5 days, dust can't rally. The miner should be able to catch a bid with that. So the dust, to me, is showing that the institutional is positioning to take advantage of any kind of rally that may manifest here. So any rally you see on the rally side could be short-term lived. All right. Let's see. Now let's look at JDST, see what's up. It should be noted too, guys, that the GDXJ is a lot weaker than GDX. So it's not uncommon to get different variation of reading or readouts between GDXJ and GDX, or in the dust and the JDST. JDST is also showing some activity on the short side. All right, and it's showing that we also have a rally alert coming here. You are in a weak. The overall longer-term downtrend is showing weakness with a build-up under the uptrend column. We have a reading of 18. So we've been in an uptrend channel in the JDST. So with that being said, you're definitely buying the pullback in the JDST as well. And I think both of these are valid. It's just showing you that we have a possible rally, but it could be short-lived. If the bots have their way, the rally could be sold. All right, so be mindful of the rally being sold, because we cannot ignore the high-frequency money on the JDST, and we cannot ignore the institutional side of things in the dust. All right. I remember institutional money is longer term, so always remember that. They still use the old school rule of longer term, even though more investment is, like I said, has been going into the shorter side of things. All right. Canadian dollar, FXC. Let's take a peep. Let's see. All right, why is this one not showing up? Let's see. I know it's right in my face and I'm just not seeing it. All right, so let's look at another column here. Give me a second. FXC. All right, here we go. FXC, you're locked in on the downside here. And the market got a little bounce within this downtrend channel, which is probably going to be used to sell. And the interesting thing is we have a 39 in the positive momentum column on the Canadian dollar. Canadian dollar should get a boost up with oil price. As the oil price boosts, the Canadian dollar should boost with it. So definitely watch this one. If this one triggers, though, the potential upside swing on FXC could be quite substantial. All right. So watch that one for a potential huge move to the top side if you get one today. All right. Let's see. Dry ships won't ask you. Yeah, I covered the dry ships. Dry ships, the market, it's still locked in. Somebody in the trading room posted about another reverse split coming on Friday. So this one's not ready to do nothing just yet. We're gonna need a story to make this one move. Okay, GDXJ now buying 3.4 billion market cap stocks versus 2 billion before. Basically, not even a junior ETF anymore. Movements won't be stellar like the juniors do. FXC crowded short. Yes, oil would boost. Thanks. You're more than welcome. I try to help as many as possible. Yeah, don't worry about it. You did miss the first one, the first part of this, but it is being recorded. So you'll be okay. You'll be, and I will, record this so that you can see it in the beginning. But don't worry too, because we're about to wrap this up, and the trading room section is about to kick off when I finish the YouTube section. So don't worry. Any question you got or something you need me to peep, we can do it off air. It's not a problem. All right, I think that pretty much does it. Does anyone else have any other questions before we end today's pre-market pulse scan? Somebody on YouTube says, "Why are you so awesome?" Man, I ain't awesome. I ain't nobody. I'm not. You're welcome. I try to help as many people as possible. I try to keep it real. That's all I can do. I try to give back. I know I can't help everybody. And what can I say? I got the trading course available at the pulsewavetrading.com. I got the trading room. I do everything I can. And that's it, man. I'm planning to do some more live trading webinars as well. So I'll be planning some of that out. I mean, at the end of the day, if you can't demonstrate what you're saying and prove it, what's the point? So it's all good. Oh, Ethereum and Litecoin. Okay, yeah, let me explain the Ethereum thing again, Litecoin. The only thing I'm able to do with the pulse waves right now is the Bitcoin. Reason being is I cannot find a reliable source to put it together the way CoinDesk does. CoinDesk has a tab you can go and you can get the open, high, low, and close data. And it puts it in a nice Excel spreadsheet, which I can then download and key the information into my system. All right, and then design the algorithms to go out and do what needs to be done. I cannot find a source to do that with Ethereum and Litecoin. If CoinDesk, if someone has a connection in there, somebody need to tell them to make a tab like they have for the Bitcoin. Make one for the Ethereum and the Litecoin, and I can hook that up, and I'll be able to add to it, and it won't be a problem. I can tell you what's what. But that's what I need. I need open, high, low, and closed data and historical data in order to be able to do it. Because a lot of work goes into creating pulse waves just for one security. So if I can't get reliable data, then I can't design what I need to do in order to get the sources. So if somebody has a means to do that, I'll do it. If somebody got the means, I'll do it. Or if someone wants to volunteer to give me the information, then please do. The quickest way to get it to me, my YouTube audience, go to pulsewavetrading.com and sign up with the website. Once you sign up on the website, you'll be able to send me private messages and stuff directly. All right. So you can include links and all that other stuff on there too. So if you got something for me, please do, by all means do. Or if somebody wants to volunteer to get me the open, high, low, and closed data, and with historical, going back as far as you can, I'll take it. And like I say, I'll put it in the system, and boom, I'll spit it out. So I'll put that out there. If anybody's volunteering, I'll take it. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And for those of you who don't know what that saying means, it's a saying I borrowed from Pirates of the Caribbean, one of my favorite scenes. At the end of the movie, it was like, take what you can, give nothing back. Now, they were talking about theft. When I said, I'm referring to the markets. take what you can by way of profit from the market, give nothing back from your profits to the market. In other words, don't turn winning trades into losing trades. That's what my saying means when I say, take what you can, give nothing back. All right. With that said, peace out. Thanks, you guys are the best. Thank you, YouTube, for your support, and also Trading Room. You guys hang on. We have a few more things to discuss in the trading room.